We also disclosed the investigation by the SEC. So, yeah, the prosecutors and investigators have been looking at this for quite a while.
And let's refresh people's memory, because I think, over the last year, there's been a lot of talk about the business model of buying these drugs, hiking the prices, and that's been controversial. But then there's also this specific separate accounting thing, which is really the story that got Valeant on everyone's attention over a year ago. So what is the accounting structure here that's so controversial?
So this has been a practice among some pharmaceutical companies of using these specialty pharmacies to market their drugs. And investigators in Congress and elsewhere have said it's a way of getting around what would ordinarily be price controls by HMOs or benefits managers by basically steering patients directly onto the branded drug instead of the generic. There's a number of companies that have had relationships with specialty pharmacies, or in Valeant's case, had their own specialty pharmacy that they were doing that with.
And the claim at the time was that this was essentially an owned and operated specialty pharma owned by Valeant, but technically that wasn't clear from the books. It had the appearance of being an independent company. Initially,
it did appear to be an independent company. It had its own separate operations, but some of the lawsuits that have been filed allege that Philidor, which is the pharmacy company, was the only, that Valeant was the only client of Philidor. And eventually, Valeant consolidated Philidor onto its own books as part of the company.
So how would this work if I was on a health care plan that asked doctors to prescribe me the generic version when possible, or Medicare with the same orders? A doctor gives me a prescription for a drug that has a generic, but that Valeant makes a brand name version of. I go to Philidor to get it filled, and they give me the brand name version even though I asked for a generic.
Right. So my understanding of this is the allegation is that Philidor would tell doctors' offices and patients, we'll take care of all the paperwork for you. This is going to lighten your load and make your world easier. Let us handle the filling of prescriptions for you. And so the doctors would write the prescriptions. It would go to the pharmacy, the specialty pharmacy, which would then, instead of checking the box for the generic, would check the box for the branded drug.
I see.
And they would get paid more, or reimbursed more from the insurance companies as a result.
That's correct.
What is Michael Pearson's role now with Valeant? He resigned, but he obviously is synonymous with the company, it feels like. Is he still involved in any way?
He's still under a consulting contract with the company and still works from a Valeant office, not the headquarters.
Huh.
The amount of work that he's doing is not clear. There's a person close to the company who said he's not making management decisions or business decisions for the company or engaging in management functions.
I want to go back to the business model, because there's one aspect that I never quite understood, which is, why did the insurance companies put up with it? So they get the order from the specialty pharmaceutical company that goes through the expensive Valeant drug instead of the cheap generic. But that still requires the insurance company to be willing to shell that out. Why weren't they playing a role of saying, no, we're just going to pay for the generic?
I think the insurance companies did refuse to play a role once they found out about it. And Valeant did close down Philidor after more became known about the relationship between those two companies because benefits managers would not do business with Philidor after that.
Well, and I wouldn't want to use I certainly wouldn't use the term kickbacks. But doesn't the insurance company get some money back from the specialty pharmacy after that prescription is filled?
That actually goes beyond my level of knowledge.
Very interesting stuff. A really interesting story. It'll be, the shares have gotten crushed already, but another 7% on this news. I wonder what this does to Bill Ackman's faith in his investment in Valeant, which he's continually doubled up, up on.
I mean, the stock's already down, what, 90% over the last year since this all started happening. I mean, I think it would be really tough to be long Valeant right now.
Yeah, he's been very vocal in his support of the company. All right, thank you so much. Christian Berthelston, who helped break the news on Valiant's CFO, ex-CFO and ex-CEO now being the focus of investigations by the DOJ for an accounting fraud case. All right, we are headed towards the close here. We've got about 21 minutes left to go. If you look at the major indexes, little change. The Dow's basically unched right now. The S&P 500 up by almost 2 points. Not a whole lot going on, but you dig beneath the broader indexes, there are plenty of movers. So let's head now to the NASDAQ and check in with Abigail Doolittle. Abigail?
Hi there, Scarlet. Well, indeed, we do have the NASDAQ basically unchanged. A quiet, flat day after last week's more than 1% decline. Perhaps investors treading water ahead of the Fed meeting that starts tomorrow. But beneath the surface, as you mentioned, we do have lots of movers. As for winners or leaders on the day, Amazon is one of the top point boosts for the NASDAQ today. Looks like a bit of a rebound rally after last Friday's more than 5% decline and the worst one-day drop since February on a disappointing third-quarter report. Another tech winner today on an earnings report, Checkpoint Software, the cybersecurity firm shares, are nicely higher, in fact, on pace for their best day since July of 2015 on an unexpected third-quarter beat. Now, they made $1.08 in adjusted earnings, beating Wall Street consensus estimates by about 6%, and the expectations going into this quarter were somewhat low. Also positive, deferred revenue grew, so some investors view that as a bit of a safety cushion. Nonetheless, more than 50% of the analysts on the street are neutral on the shares of Checkpoint. As for what's dragging on the NASDAQ today, real underperformance, the biotech sector. We have the NASDAQ Biotech Index near session lows, down more than 1%. On the month, the biotech index is down more than 10%, on pace for its worst monthly performance since January. As for what's happening today, all of the biotech giants, or many of the biotech giants, I should say, are dragging. This includes Regeneron, Alexion, Amgen, and Celgene. Now, some of this could be jitters into the election. Plus, last week, Amgen did put up a third-quarter report where they beat, but their guidance for the fourth quarter suggested that pricing power is declining for one of the key drugs. So this could have investors nervous as well, Scarlet.
Yeah, if you look at biotech, it's down more than 10% so far this month. What does that mean for the NASDAQ overall?
Well, Scarlet, this is something that we talk about frequently, and it could prove to be pretty important. When we go into the Bloomberg and we take a look at #BTV4667, this is a more than 1 year chart of both the biotech index in blue and the NASDAQ in white. The biotech index is back near the year-to-date lows, not at those lows, but close to. The biotech index is down about 36% from the peak, so a real bear market, but we see the NASDAQ still high. Now, there had been a strong correlation ahead of this divergence. There's a 14% weighting in the NASDAQ to healthcare. Healthcare and the biotech sector very gamey, sometimes a tell on the broader markets. Plus, that area of congestion last year that broke to the downside, there's an area of congestion ahead again right now over the last couple of months. Unless the biotech sector, Scarlet, starts to recover, it's hard to see that area of congestion breaking to the upside. In fact, the biotech sector may suggest that the NASDAQ and the broader markets could enter into some sort of corrective phase. So something important to keep an eye on here.
All right, good stuff. Thank you so much, Abigail Doolittle, live at the NASDAQ.
Coming up on What'd You Miss, the major players in the deal that would combine the oil and gas businesses of GE and Baker Hughes. We'll hear from the Baker Hughes CEO, Martin Craighead, and GE oil and gas CEO, Lorenzo Simonelli. This is Bloomberg.
Today.
What'd you miss? One of the biggest deals today included the news that GE is combining its oil and gas business with Baker Hughes. Under the terms of the deal, GE will contribute its oil and gas business and $7.4 billion through a special one-time cash dividend of $17.50 each for Baker Hughes shares. Looking at the shares trading right now, you can see both are down, but Baker Hughes is off 6%. Earlier today, Alex Steele interviewed GE Oil and Gas President Lorenzo Simonelli and Baker Hughes Chairman and CEO Martin Craighead. She asked why the $400 million in revenue opportunities cited as part of the deal wasn't more.
We think that's a pretty modest projection. Again, if you're able to play in a much broader array of the oil and gas sector, and you couple upstream our domain with GE's more midstream, downstream domain, then you can go to the customer community, Alex, and have a conversation about reducing their dollars per barrel, improving their recovery factors, optimizing their production profiles, all of the urgent issues that are facing the customers.
Can you expand on that $400 million worth of synergies? Does it get to $1 billion? Where do you see it getting to?
Well, I don't want to put a limit on it. As I said, the $400 million is a very modest number. You tell me what the oil price will be 2 years from now and what our customer spending patterns will be. I think that number could go well north based on what the spend pattern is out there and where that spending is occurring. Right now we have a big bias in North America, a little bit of a pickup in the Middle East, but the offshore arena is still, facing some headwinds. But again, whatever the global economy looks like and global oil prices will very much drive that synergy number. But make no doubt about it, Alex, that $400 million is a modest projection at this stage.
Why now? Because this deal is so levered to what the oil price will be. Your oil price is relatively conservative. You said on the call between $45 and $60. Why was today the right time to do this deal?
Well, look, as you look at giving value to our customers and also to our investors, this is the right time. And actually, we've modeled this transaction in multiple scenarios, even in a downside case where oil maintains its current levels. And this is still attractive from an investor perspective and provides accretive nature of value. And when you look at the complementary nature, but also what we're able to do to differentiate ourselves with the customers by bringing in the GE store, and then also the cost synergies. We've got a modest cost synergy profile of 4.5% of our 2020 spend. And again, you get that through the product cost out initiatives, the footprint, the ability to take the manufacturing excellence into the Baker Hughes manufacturing footprint. So we see this as being the right time and really providing value to when our customers need it in each of the segments. And the cost per barrel is what we're going after.
My last question, Martin, goes to you. We talked a lot about the industry, and I want to see when you see pricing power coming back for the oil services company. When do you start to get to raise prices?
That's a great question. Alex, I think it's going to come back in pockets geographically as well as pockets within the respective portfolios. Everything else being equal right now, if we just kind of project, as we said on our earnings call last week, we see a slow grind up in North America. We believe that our customer community needs something around 55, between 55 and 60 for some durable period of time, depending on that particular E&P company, to where they have the confidence that they can begin deploying capital in a meaningful way. Once that happens, depending on the product line, particularly your technology-based ones, you'll get price traction pretty quickly. As I said on the call last week, some of our high-end directional drilling services are pretty much sold out. So I would expect there. Artificial lift, secondly. I think some of your areas around pressure pumping and fracking, as you know it, could be a little bit slower to get pricing. International, certainly Middle East is already picking up. And some of the offshore markets, as I said earlier, are going to be a little slower to recover. But this combination of these two companies comes together, helping our customers get their cost per barrel down, should bring that, this whole activity curve forward a little bit.
And that was GE Oil and Gas President Lorenzo Simonelli with Baker Hughes CEO Martin Craighead.
I'm Scarlet Fu. It is time now for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Brocade Communications is in advanced talks to sell itself. That's according to people familiar with the matter. The company is nearing the final stages of a sale process. Brocade has a market value of about $3.5 billion. Broadcom is one of the interested potential buyers. No deal has been reached, and talks may still fall apart. Now, an acquisition of Brocade could be announced as soon as this week. The two biggest daily fantasy sports companies are close to joining forces under the leadership of DraftKings co-founder Jason Robbins. That's according to people familiar with the merger discussions. Robbins is expected to serve as CEO of the combined firm, which is as yet unnamed. Investors have been encouraging a tie-up for months, hoping that the companies could cut their exorbitant ad spending and also unify against other challengers. Palantir is getting a second chance at a U.S. Army contract to build the next phase of its combat data system. A federal judge today ruled that the Army violated bidding rules by failing to consider commercially available options, effectively shutting out the Silicon Valley firm. The court barred the Army from awarding the contract and ordered it to reevaluate commercial offerings. And the story we've been talking about this hour, U.S. prosecutors are focusing on Valeant Pharmaceuticals' former CEO and CFO as they build a fraud case against the company that could result in charges within weeks. This is according to people familiar with the matter who say the authorities are looking into potential accounting fraud charges related to Valeant's hidden ties to Philidor, which is a specialty pharmacy company that Valeant secretly controlled. In a statement, Valeant says it is cooperating with authorities. And that is your Business Flash update.
Up next, the coffee craze. Millennials are becoming Java junkies at an earlier age, and that's driving up global demand to a record. We'll show you what that means for the bets on beans. This is Bloomberg.
I'm Scarlet Fu. What'd you miss? Well, this is something that's a late addition from Peter Cheer, one of our frequent guests. He's, of course, with Green Capital. And he points out that the VIX has been surging over the last couple of days while the S&P 500 has been flat. So the blue line here, of course, is the VIX, and I've normalized it to since last Friday. So we're talking about over the last 5 trading days. The white line is the S&P 500. It is down about 1%, 2% over this period, 1.01% during the past 5 days. The VIX, meantime, has surged 34%. Now, I know we don't look at VIX in terms of the percentage point increase it's gained. It has gone from 13 to 17. Certainly, that's a big move, but if you compare it to the 10-year historical average for the VIX, which is 20.7, we're really not talking about any kind of elevated anxiety here. And of course, the VIX, we have to remember, people call it the fear gauge, the anxiety gauge, but really what it is a measurement of how much people are willing to pay for protection against losses in the S&P 500. Again, Peter Cheer pointed this out as one of the interesting things that he noticed in today's market, where the S&P is flat and the VIX continues moving north.
Yeah, that is very interesting. Signs of bubbling discontent underneath the surface. I'm looking at something very important, and that's coffee. This is a chart that shows worldwide demand for 60-kilogram bags of coffee. It's absolutely exploding. 2016, the biggest, it just keeps growing, but we sort of flatlined for a while. Now 2016, people are drinking more and more coffee, particularly millennials. I drink a lot of coffee. I'm not a millennial, but I can certainly understand why people are drinking it like crazy. It's causing a big, people are betting a lot on coffee. People are going long it because of this seemingly unendless demand for it. And there you go. Just
how many cups, Joe, on a tough day, on a difficult day at the office, and I know you come in at like 4 o'clock, how many cups would you go through?
6, 7.
That's
something like that.
Okay.
Wow.
That's a lot of caffeine, but apparently that you won't be a depressed person. People who drink a lot of coffee are less likely to be depressed.
Doing the right thing here.
I found this story. Hillary Clark out in London sent out a chart about the miners, the British miners. She had Anglo-American, Rio Tinto, BHP Billiton, and so forth. Colin Hamilton is the source of that. He's the head of commodities at Macquarie. And talking about, I think, the British miners, he said, this time last year I was talking about a commodity-specific financial crisis. That rally in commodities prices has taken that off the table. The foot is really off the throat. And I thought, that's interesting. I wonder if the same is true about U.S. markets. So I broke up the S&P into 68 different industry groups. You can do this on the Bloomberg by typing SPXL3. It's the third level of the S&P GICS classifications. And year-to-date, you can see metals and mining here, also the best performing group of all of them. So out of 68 groups, metals and mining doing the best, up 41% year-to-date.
By a long shot, too. I wonder, to what extent is that all because of gold?
And the interesting thing is this, because of the rally in commodity prices, or because of recovery in commodity prices, but also in the face of a strong dollar.
That's a good point. All right, the market closes next. Take a look at the major indexes with less than 4 minutes to go before the close. Flat, flat, flat. This is Bloomberg. away from the closing bell. What'd you miss? U.S. stocks, little change on the last trading day of October, but major indexes are on track for monthly declines. The moves come ahead of a raft of key corporate and economic reports and 3 central bank meetings later this week. I'm Scarlet Fu.
I'm Joe Weisenthal.
And I'm Matt Miller. I want to welcome our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 p.m. to 5 p.m., and more people are doing that.
The future of TV.
We begin with our market minutes. What can you say about indexes that are a little changed right now? The S&P 500 basically unched, the Dow off just marginally by 0.1%. The Nasdaq little change as well. Both the Nasdaq and the S&P falling by less than 1 point. And if you look at the volume here, it's pretty much in line with the 20-day, 30-day average. There's not a lot to say on that front either.
Yeah, you know, not much going on this week. It's not like there's a big election in flux or a bunch of central bank decisions coming up. Just sort of
no one wants to get out in front of these major events.
Nothing going on.
Let's take a look. I mean, there have been some real fluctuations. So we were up and then we were down. Utilities, the big gainers, but we also see consumer staples up. So people are, the cautious investors are bidding up those assets. Meanwhile, you have healthcare as a loser today. Energy is the biggest loser, down more than 1%. And that's why I've been saying today that I think the market wants to go with oil today. If you take a look at the big movers, ExxonMobil is the biggest loser as far as point decliners on the S&P. It's only down 1.7%, but of course it's a gigantic company. As far as the winners, you have DaVita Healthcare, its biggest gain in 3 years as it backs away from some insurance applications. Lowe's Corp, a big gainer as its profit rises due to an insurance unit. CNA, and then you have Level 3, that of course due to the acquisition. So Exxon and the oil stocks really holding the markets down.
And of course, a quick mention of Valiant, because we broke the news earlier. Bloomberg reporting that the DOJ is now investigating the ex-CFO and ex-CEO of Valiant Pharmaceuticals. You can see here the plunge in Valiant shares, now down 12%. So extending its losses, although this is a company that's lost more than 80% of its market value so far this year. This is all according to people familiar with the matter. The DOJ looking into Michael Pearson and Howard Schiller as they build a fraud case, an accounting fraud case against the company.
Brutal. All right, quick look at government bond markets around the world. We see lower yields in the U.S. modestly, down to 1.83. They fell also on Friday on some of the selling. The Bund ended up unchanged. We got inflation data out of Germany that was roughly in line, so we continue to be in positive territory from the Bund. And yields lower in South Africa on the short end on the news that its finance minister, there will not be charges against him. That had been causing a lot of volatility in the rand lately, but some comfort to South African investors that the finance minister won't be charged with any crimes, and so you can see some buying of government debt there.
And, of course, we'll touch on that a little bit later. But speaking of breaking news that happened over the last 90 minutes or so, this is the British pound climbing. Well, it was actually higher already, but staying higher as Mark Carney, the Bank of England governor, said that he will remain as governor in the role until 2019. He had previously committed only to a 5-year term, so now he's extending that
you should point out, though, that typically terms for governor of the Bank of England are 8 years. So he is also saying that he will not stay for a full term. Which I think is interesting. I mean, Joe points out he's going to get through the important parts, right? He's going to get through the Brexit,
the
and
Article 50
negotiations. Right. But then he's going to, maybe he'll go to Wall Street and make some real money.
Maybe he'll go back to Canada.
No, he is one of the
higher. And be in politics in Canada.
Be in politics.
Possibly.
All right. We'll continue to watch that one. Of course, there's another central bank meeting tonight as well. The BOJ is meeting. And the yen has weakened more than 4% since that last meeting on September 21st. So big question here with the yen weakening into this BOJ meeting is how will the BOJ proceed next? We know that it's targeting the yield curve. How will it meet this new target? What does it mean for its QE? All questions that we may or may not get the answer to. And Joe mentioned the rand, of course. I just wanted to show that the rand is the best performer among the major and emerging market currencies against the dollar. Traders are hoping that now that this political story is behind them, this can help South Africa avoid a debt downgrade this year.
And on commodities front, big story today, oil down over 4% on news that OPEC hasn't been able to get the details together for that production freeze that got a lot of hype. As you can see, it's really slipping well below $50 now, below $47, in fact, on West Texas Intermediate crude. And zinc is at a 5-year high, rising 2.5%, almost 2.6%. On a belief that demand is coming in stronger than expected out of China, with those GDP numbers holding up. So zinc doing very well.
Those are today's market minutes. We're going to take a deep dive now into the Bloomberg. You can find all the charts using the function at the bottom of the screen. Matt, you're going to kick it off.
I am. Well, I'm going to kick it off where Joe left off, basically. I'm going to talk about oil here because, obviously, the OPEC news, every day we get a new OPEC member that doesn't want to play with Saudi Arabia's group to cap or even cut production. So that's not good for oil prices. But maybe the technicals will actually save it here. I've got a chart showing oil. This is Brent. I like to look at Brent because it's a global benchmark. More than half of the world uses Brent, even though Texas oil counts the most here in the U.S. and probably to you, Joe, as well. Everyone looks at Brent. Here you can see that we're getting closer and closer, or actually now today hitting the 50-day and 100-day moving averages here in one day's trade. Very interesting.
Wow.
So that's one thing to look at. The other thing to look at is RSI. We're getting closer and closer to an oversold level. Let me pull this up and look at the bottom here. Right down to a 40 on an RSI. It doesn't count officially as oversold until 40, and that doesn't necessarily mean that it is oversold, but that's what technical analysts look at. And then enough of them believe in this mumbo-jumbo, then they will trade on it as well.
All kinds of lines touching other lines.
A whole bunch of lines are moving around.
All right, I'm looking at a interesting chart ahead of the election, something I've been watching. The blue line is the Trump-Clinton spread. So when it rises, that means Trump's doing better in the Real Clear Politics average of polls. When it goes down, that means Clinton's doing better. The polls have been better for Trump lately. For a while, it had kind of been tracking the biotechs. The white line is the ratio of the IBB biotech ETF relative to the S&P. Huh. So the white line means that the biotechs have been underperforming when Clinton was doing better, which kind of makes sense because, Clinton theoretically would be more inclined to implement price controls. She tweets every once in a while about drug prices, and then they all tumble. But the lines, as you can see, have disconnected, and so Trump's doing better, but biotech's still doing quite weak. In fact, that they're at their lowest level in this chart relative to the S&P. So maybe a bit of a divergence, maybe an opportunity, maybe not, but something to keep an eye on to see if that divergence persists.
The future of biotechs as a growth story may be at stake here.
It could be, or maybe there's just a trade in the next week.
Well, speaking of the election, I'm taking a look at how stocks are stuck in the worst rut since 2006. We know that they've been stuck in a range. Individual companies tend to move in lockstep with each other during this range-bound trading. The good news is that these equity correlations are starting to break down. The top panel shows the implied correlation in the S&P 500, and you can see that that has moved up after this recent low. Now, the bottom panel is the historicals, the 30-day realized correlation among S&P 500 members. And since this point in October of 2015, it's come down 34% since then. This was a 4-year high, by the way, so it's eased since then. There's a lot of cash sitting on the sidelines. Let's bring in Oliver Rennick, who is a stocks reporter for Bloomberg News. And, of course, we've talked a lot about the $50 trillion plus that's sitting on the sidelines as cash. Rob Capito of BlackRock made that point to our Lisa Bromwitz not so long ago. And the hope is...
That's worth a pause, I think.
Yeah,
if that's true... $50 trillion in cash, I mean, that's more than there is in cash, right? So it's only theoretical cash.
It's a lot of potential firepower for equities, and if there is a loosening in correlations, that could potentially be good news for stocks.
True. I mean, it's a lot of firing power for really anywhere they want to put it. I just actually finished compiling our small but useful allocation table on the Bloomberg, which basically does a survey of strategists. Yeah, that's the title, small but useful allocation table. And basically what it looks at is how, where people are suggesting to put money right now. And it's been pretty flat in terms of the equities weightings, where there's still a lot of hesitation out there in terms of where to put your money in stocks. What's interesting about this story that my colleague Joe Scioli put out about the correlations is that, of course, does signal a time in which, if you're a portfolio manager and you're concerned about picking stocks and being able to distinguish yourself from just the rest of the market, that's a good thing when you look at those correlations getting lower. The problem is that that's actually been kind of trending really for a little bit now, where the past 3 years has been pretty high correlations, hard to find a lot of dispersion in the market. Yet up until this quarter, this past quarter and third quarter, it's been very difficult, and money managers have done very poorly at outperforming.
So it's a good time to try. The problem is they just don't seem to be very good at it when they do try.
We did get one bit of positive news. Bank of America's third quarter, about 58% of large cap managers beat the benchmark, which compared to like 18 at the beginning of the year, we're making progress.
Structurally, as more and more money goes into ETFs and passive strategies, would we expect structurally correlations to just sort of rise over time?
That's a great question. I think the logical answer there would be yes, because that is really the strongest case for why strategists and analysts have, rather what they've attributed those correlations to, where you have obviously the kind of, tide lifting all the boats at the same time.
Did you show your correlations chart yet? Because I have it on my screen.
Yeah, no,
I think it's awesome.
Yeah, sure. No, pull it up again because.
So this is 4671. And if you look at this, it's really a cool chart, just the way it's put together. I mean, visually, because the white is S&P, the S&P index. The blue part of the line is the government 10-year. You know what I would do if
I'm inverted actually right now?
I'll go ahead and what I would do is just put in the zero line, because I think it sort of ties the whole thing together, if you will. I'll
like the Jews carpet.
I'm going to make it red, obviously, but that really, I think this helps you to, and I'll extend it both ways, and I'll make it kind of thick here. I'll give it a 4.
We're going through a very full.
Now look at what you can see here. So, 5 months of correlations has only happened once in the last 2 years. It happened once then in 2014, and before that it was 2009 was the last time we saw that.
It's a pretty rare occurrence. The caveat here is I think it's somewhat of a flaw to talk about how bonds and stocks always have to move inversely to each other, because that was the norm it wasn't the norm for a very long time. This is a fairly recent thing of the past decade where the two have moved inversely. But within that sort of trend, the past 5 months here, you have seen the stocks and bonds move together very closely. So that chart you were just showing, that shows basically the inverted yield, which is in the same direction as stocks, so the price is moving in the same direction. This is really important. I think a lot of people are watching that because you want to know whether or not that sort of correlation is going to unwind in a manner that doesn't send everything breaking down.
Speaking of correlations, you recently did a nice data dive to look at what indices are most sensitive to changes in the election. I showed the biotechs earlier. Looks like there might be something there. I got a chart here where you break down a bunch of different categories and look at how they relate to these Clinton versus Trump polls. What did you discover here?
Right. This is, I think, really interesting. We've got a story coming out about this tomorrow morning, which is sort of looking at the exactly. We're doing a little tease here, the deep tease. We're trying to figure out what has been moving with the election. Instead of trying to speculate on what each candidate's actual administration is going to look like and who's going to benefit, let's look at thus far which companies and sectors have traded most correlated with both their likelihoods. So there are a few surprising things here. There's some that aren't so surprising. This is the sector dive, which is maybe not quite as useful, but it's still useful. What we're finding here is that financials at the heart of it are the most correlated to both candidates in the sense that they're strongly correlated with Trump's odds. So they do well when Trump does better, but at the same time, they also do poorly when Hillary Clinton does better. So they're inversely related. You have to remember this is not, a two-person race. You can have more people coming into the polls, so they don't necessarily have to be inversely related to one and positively related to the other one. So, for example, healthcare is very positively correlated is very inversely correlated with Clinton, but not very positively related with Trump. So it's not really clear what he's going to do for biotech. It's just that they might get some relief if Clinton is not president. So we've got a lot more of that tomorrow. Definitely check it out.
Lots of useful stuff for this final furious stretch to the race.
Exactly.
All right, Oliver Reddick, stocks reporter for Bloomberg News. Thanks so much. We have some breaking news, some corporate changes, some corporate personnel changes over at Viacom. Viacom has now named Robert Bakish as the acting president and CEO. He's a longtime Viacom executive. He's been with the company since 1997 and has most recently been running the international networks since 2011. He will succeed Tom Dooley, who's the current interim CEO, who, of course, succeeded Philippe Dauman after he was pushed out, more or less, by Shari Redstone, who is the daughter of Sumner Redstone, who controls Viacom and CBS. And, of course, this all comes as Viacom explores a merger with CBS. We should give a shout-out to Lucas Shaw, our Bloomberg News reporter, who had been reporting over the last couple of days that Viacom was close to naming Bob Bakish as the interim CEO, and now the news is official that Viacom has done just that. We'll have much more on the markets coming up after this. This is Bloomberg.
What do you miss? It's the last week of campaigning for presidential nominees Hillary Clinton and Donald Trump. In the final days leading up to November 8th election, how are markets positioning themselves, and what is the effect of the election on the economy and the public mood? Peter Atwater, president of Financial Insights, look at how changes in confidence impact our investing decisions. Peter, it's extraordinary election season. Nobody can remember anything like it. When you look at the public mood, do you see a feedback loop where the sort of extraordinary events we're seeing in the race feedback into investor and consumer behavior?
Actually, I'm seeing investor confidence and consumer confidence impacting how we interpret those events. So you see a landslide enthusiasm towards Hillary Clinton right before the Trump news breaks, and then the video hits the screen, and it's a bombshell to the side of the ship, and everybody runs for the exits. And so it's a combination of mood, leading events, and the reaction to those events.
How do the swings in confidence for this particular election cycle differ from what we've seen in the past, Peter?
So what we're seeing in this election, which I think is unique, is that neither Clinton nor Trump is an especially good fit with where we are right now. We're in this no man's land between high and low confidence. Clinton correlates extraordinarily well to extremely high confidence. Trump, on the other hand, to very low confidence. And so what we're seeing in this election is small changes in confidence having a major impact in the popularity of one candidate versus the other.
What do you think about the fact that the market didn't seem to react very much at all on Friday after the James Comey bombshell, which for political reporters was like the biggest story since 9/11, but for the markets barely, moved the needle?
And the same would be true for consumer confidence. Gallup does a daily poll that I look at, and it has actually stayed very steady through this, which suggests to me that confidence is rising slightly and that investors and consumers are shaking it off, that it's not having the impact that I think the political wonks were expecting.
One of the striking things about this election is the high degree of negativity towards both candidates, but also the high degree of polarization. I mean, there seem to be very few voters that are actually up for grabs this year. Most people seem pretty locked into one or the other, and they're just fighting over the scraps. So really, if anything, the candidates aren't even really fighting for the scraps. They're trying to motivate their own bases to go out. In such a sharply polarized country and electorate, what happens after the election? Would you expect to see the mood of the losing side collapse dramatically? I mean, we get data on how Democrats are feeling, Republicans. Would you expect to see a sharp divergence after the vote?
Well, I think that what you've seen so far is actually a larger base of undecided than you have polarized. The truly polarized camps are small relative to the middle ground. And I think what you're seeing in terms of folks coming to the polls is voting in an environment where my enemy's enemy is my friend. So they're not exactly as polarized as you would expect. Now, what I do think is going to happen is that no matter who wins, the losing side is going to take this very badly.
Right.
And you definitely have very strong views on the far right and the far left that I think have to be paid attention to. The chronic underconfidence on both of those sides is something that I think policymakers really need to pay attention to.
You referenced the far left and the far right. We're used to these partisan battles, but in your note to us today, you mentioned that populism matters more than partisanship. Which party do you think is making more headway in supporting populist causes, especially down ballot, once you get past Hillary Clinton and Donald Trump?
Well, there's no question that the Democrats are making hay on that. I think that Elizabeth Warren has been an extraordinary focal point for the Democratic Party. And if you were to just look at her display during the testimony of John Stump at Wells Fargo, she just pummeled him one side and down the other. So I think they have definitely taken advantage of it. At the same time, though, the bipartisan beating that he took and that Heather Bresch took suggests that after November, populism isn't going to go away no matter who is elected. Voters are still angry, and I think you're really beginning to see that in the healthcare space now.
And maybe we can see that as well in our neckties, right? I mean, you mentioned in a note that J. Crew is beginning to widen its ties by about 1/4 of an inch. That's obviously a very popular retail outlet for a lot of guys with ties. Joe goes with the thinner ties. Peter, just explain to us what this means. What does it say about Joe that his ties are thinner?
Joe is a very confident guy. That 1960s Beatle narrow tie is a peak in confidence phenomenon. Saw the same thing in the late 1920s. His confidence falls, ties widen out. In fact, they got so bad in the 1970s that they had neckerchiefs, covering everybody's lap. So wide ties is not a good indicator.
I don't think I've ever seen Joe in a wide tie.
At one time, remember I had to come in on a Sunday and I had a tie in my drawer. But that's a great note to end it on. Thank you very much, Peter. I appreciate the endorsement of my confidence. Peter Atwater, president of Financial Insights. Thank you very much.
Coming up, does the Federal Reserve take into account financial market stability when deciding its rate path? Maybe not, and we'll show you why. This is Bloomberg. I'm Scarlet. What'd you miss? Well, we know it's a big week for central banks, and the FOMC announcement comes Wednesday. We'll find out exactly what they discussed in 3 weeks' time. Most people are discounting this next meeting as a dead meeting. Torsten Slok of Deutsche Bank noticed something interesting, that the past minutes of Fed meetings don't indicate, or I should say indicate, that the FOMC does not appear overly worried about financial stability, because there are no mentions of those terms at the meetings. Certainly in September, no mentions whatsoever, and that's in contrast to, say, April, when they mentioned it 14 times following the turbulence in January and February. Meantime, on top of that, Torsten Slok noticed that there's no mentions at all of the terms financial instability in 2015 and 2016, which is a real disconnect with market sentiment overall, since people are very worried about what the Fed's rate hike in December, when it does do it, probably, what due to financial stability across asset classes.
It really is striking the degree to which financial stability is just sort of a euphemism for markets are going to crash or there's a bubble forming. And it is really fascinating to see that big spike there in April, or earlier in the year, when there was all that volatility. and now not here at all.
Disappeared completely.
He should do a study of mentions of financial stability on Bloomberg surveillance, because I think it really spiked around then as well, and now Tom is saying it less and less often.
That's a good one.
Yeah.
I'm looking at the global bond sell-off just because you got to keep an eye on it, and the key word is global. You see the yields rising. This is where we currently are on the 10-year Treasury, up there at the top in white, the 10-year Bund down at the bottom, and in the middle, 10-year Gilt, which is the UK 10-year yields. Really rising across the board over the last several weeks. I think it's really interesting. One thing that struck me at with the 10-year Treasury yields, when we got that news on Friday about the FBI and the emails, we saw stocks really sell off. We saw the peso sell off. There was a little bit of a decline in 10-year yields, but, you know, people wonder if maybe Trump would be put upward pressure on yields due to his fiscal spending and tax cuts. So keep an eye on the 10-year yields over the next week to see
the supply.
what the market has internalized. Exactly right.
Very interesting stuff. I have a chart from David Doyle at Macquarie that initially looks like a good thing. We have cyclical wages here in terms of construction workers and manufacturing workers rising, especially construction workers in blue just shooting up there. However, he's worried, although it's not his base case scenario, that this could lead to a bit of an overheating and then to more aggressive Fed policy and possibly the end of this long bull market. Stay with us. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Donald Trump is seizing on the ongoing flap over Hillary Clinton's private email server. He says she, quote, is not the victim. The American people are the victims. Speaking in Michigan, Trump said Clinton, quote, broke the law over and over again. He did have positive things to say about FBI Director James Comey.
I have to give the FBI credit. That was so bad what happened originally, and it took guts for Director Comey to make the move that he made in light of the kind of opposition he had, where they're trying to protect her from criminal prosecution. You know that.
Clinton has not been charged with any wrongdoing. The FBI declined to recommend charges this summer over her use of a private email server while she was Secretary of State. Mrs. Clinton is challenging the FBI's new email inquiry, saying there is no case here. She says she's not making excuses for her use of a private email address and personal internet server at the State Department. She says if the FBI wants to investigate emails involving one of her closest aides, Huma Abedin, quote, they should look at them. But she says she's sure the FBI will reach the same conclusion it did earlier this year when the Bureau decided against prosecution. In Newark, New Jersey, jurors in the George Washington Bridge lane closing trial are now deliberating. Two former allies of New Jersey Governor Chris Christie are on trial for helping create traffic jams in Fort Lee to punish the mayor for not endorsing the governor's re-election. Christie denies any knowledge of the plan. There are reports that 13 miners have been killed and 20 others trapped after a gas explosion in China, the world's largest producer and consumer of coal. China has announced plans to close more than 1,000 outdated mines. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet, back to you.
All right. Thank you so much, Mark. Let's get a recap of today's market action. Not a whole lot of action when you look at the major indexes, although the Dow Jones Industrial Average did fall 19 points. The S&P and the NASDAQ were little changed. Energy was the big loser here as oil prices declined. Some of the more what's considered safety stocks did better, utilities and real estate investment trusts.
But ultimately, very quiet start to a pretty huge week.
Also, we want to just reiterate the breaking story on Valiant. Bloomberg News has written that Valiant's former CEO, Michael Pearson, is under criminal investigation for accounting fraud. The Department of Justice looking into whether or not he committed an accounting fraud. Although we have so far no comment from Valiant, you do see the shares falling 12.3%. Is this the intraday? This is the intraday, so the news came out just before the close, and the shares absolutely tanked.
The stock is now lowest since June 2010.
Right, down 82% year to date, so it's been a rough year for Valiant.
Pretty rough. What do you miss? The strong relationship between the VIX and the Investopedia Anxiety Index. What is that? The financial encyclopedia is using online searches as a measure to forecast activity in the market. Take a look at this chart. The Investopedia Anxiety Index looks to be a few steps ahead of the VIX, which could be a real advantage to investors. Q Macro founder Saeed Amin tested the theories and correlations between the two. He joins us now from London. Saeed, thank you very much for joining us. So this is basically an attempt to look at what people are searching for to see if you can measure rising anxiety among investors before it shows up in traditional metrics like the VIX. So explain to me the research you did and the data that you looked at.
Yeah, so thanks for having me on the show, first of all. So as you described, it's trying to measure investor anxiety. And it does that by looking at certain internet keywords, for example, one related to, say, short selling. And the idea being that as people want to put on trades, they'll actually try to research that beforehand. And the research that I did was to look at the anxiety index and try to understand how it was related to VIX. And later on, I also tried to see, given that there's a strong relationship between these two indices, can I actually use it to create trading rules off the back of as well for trading stock indices?
And part of this, Saeed, is that the VIX is an incomplete measurement of fear. We call it the fear gauge, but it's not really. If you come inside the Bloomberg, what we've seen over the last 5 trading days is the VIX surging 32%, even as the S&P 500, on which it's based, has really not done a whole lot, basically drop 1%. Why is the VIX insufficient as a measurement of anxiety?
Well, I think one thing is that the VIX is reflective of what's happening in the market. So the VIX itself is based upon the volatility of S&P 500, so basically options written on that. But it's potentially not going to read into what people are thinking about doing in the future. So I think that's one thing that you can pick up potentially from search patterns. So even before somebody puts on a trade and they do their research, it can pick up something extra from that beforehand. So whenever you want to put on a trade, you do research, and typically that might end up taking you onto the web and searching for specific phrases. And if people are searching for things like short selling, then kind of suggests that they're anxious about what's happening in the market going forward.
So you mentioned that they're roughly similar, this sort of what people are searching for, and the VIX. Tell us what you found in terms of the trading strategy. Could you implement a successful trading strategy based on anticipating market movements of the searches, and how far back did you look in this, and what did the data show you?
Sure. So I looked at a data set going back a few years to 2012. That's actually the biggest history that you have for the anxiety index. And I tried to look at a long-only case for stocks, and also trying to filter using VIX as well, and also trying to filter that strategy using the anxiety index. And what you tend to find is actually the best risk-adjusted returns are used, basically found by using the anxiety index. So you typically have lower drawdowns compared to being long stocks on an isolated case by using the anxiety index.
It's interesting you look at long only. I would think this is a great way to pursue short strategies, right? You can make money when people are freaking out and searching Investopedia for how to deal with that.
Yes, that's true. Actually, there's some research that I did in the rest of the paper, but it's not on here, where I actually looked at flipping the rules. So having a long strategy most of the time, but when you have a lot of anxiety as measured by the Investopedia index, actually going short. So it is true that you can use it for going short as well. But I wanted to use just a long-only benchmark, just because that's typically what most people do. But you are all right in saying that you can use the index to go short as well.
So you follow the quant world pretty close. I mean, you're deep in the weeds of the quant world. Are more and more sites opening up this kind of data to license out for traders to actually implement this? I mean, it's interesting that it works out in theory, but are there more and more feeds that are opening up where traders are, looking at Twitter stuff and Google search words and other things to essentially create rules based on real-time sentiment and other indicators like this?
I would say there's a big increase in the area of alternative data, whether that's using Twitter and social media more broadly, using web data as well, but also, for example, using other sorts of signals to, for example, looking at what Fed communications are saying and doing natural language processing, maybe trying to use the movement of mobile phones as well to understand traffic within a certain area. So there are so many different areas of alternative data, and I think there's a big push now within quant funds, but also more broadly within macro funds, to try and understand how you can use alternative data to better get an idea of what's going to happen in the future. And it's actually a big focus of what I do, trying to understand what you can do with alternative data.
Saeed, I thought it was very interesting around the Brexit when everyone started paying attention to Ladbrokes and what betting was pointing to. And after they were proven so wrong, someone said, well, maybe there was a hedge fund that needed to get out of its position, so they just went and placed a small bet and were easily able to influence all of the betting across England and the UK. How big is alternative data? In other words, would it be easy to game the system? Could you use a network of computers to game the system?
Right, a robot farm in Russia to have a bunch of people search short selling.
Exactly.
Well, I would say whenever you use alternative data, I would recommend, whenever I build a strategy, is not to use a single trading rules. So typically you want to use a number of different trading rules. So if one thing doesn't work for any specific reason, then hopefully you'll have more diversification around it. So I don't think anyone would ever want to have one specific rule just working by itself. So I guess the main thing, whether you have the real power, is actually combining these data sources together. So maybe if one of them doesn't show anything interesting, then all the others do, and you can use that as a signal. But I would say you probably don't want to use one signal in isolation in any case. But it's a good point that you raise.
All right, great stuff. Very interesting research. Saeed Ahmed, founder of Q Macro, thank you very much for joining us.
All right, thanks.
Coming up, it was an October surprise that could be a game changer for the 2016 presidential election. We'll talk about how the renewed FBI review of Hillary Clinton's emails is impacting voters. This is Bloomberg. What'd you miss? Well, the bombshell that FBI Director James Comey dropped Friday on the 2016 election accelerated a trend of Republicans moving towards Donald Trump. Early data is suggesting that Democrats in key states remain unmoved. In a new NBC SurveyMonkey poll done after the news of the FBI probe, Clinton is still edging out Trump 47% to 41%. So can Hillary Clinton keep her lead in the final days of the race? Let's ask Sahil Kapoor of Bloomberg Politics, who joins us now from Washington. So, Sahil, basically, this news was enough to push Republicans who were maybe on the fence to finally pull the lever for Trump, not enough to sway Democrats deeply entrenched as Hillary Clinton voters.
That's right, Matt. I think what we saw earlier was in the last week or two, we've seen a trend of Republicans moving in the direction of Trump. It was always likely that many of these voters would come home at the very end, even though they've been on the fence because they don't love Trump. They are united by a dislike of Hillary Clinton. And this news moves them further toward Trump. The early evidence we have is that there's no clear sign of Democrats moving off Hillary Clinton. A YouGov poll over the weekend that was taken after the Comey news in 13 battleground states found that only 5% of Democrats were less likely to vote for Hillary Clinton as a result. That's not quite dispositive among her supporters. It was 1%. And two polls today, the NBC poll shows her up 6, unchanged. The Morning Consult poll shows her up 3, also exactly unchanged from before. So, yes, there are some warning signs here. She has tended to handle this issue badly in the past and has driven up her unfavorables. But so far, I think there's no sign that she's losing her coalition.
Sahil, obviously a number of analysts have come out trying to estimate how much this is going to change the game in the final several days of the race. I mean, nothing like this has really ever happened before. So isn't the only honest answer that we have no idea?
That's true. You know, that's always the only honest answer. The only poll that matters, they say, is the one on Election Day, with the caveat that millions of people have already voted and Democrats are seeing some early voting advantages. Republicans do tend to turn out in bigger numbers in a number of these states like North Carolina and Georgia on Election Day. But, here, Joe, here's one way to look at this. Right now, in the Washington Post ABC tracker, the latest one that we had 1 day ago, showed that Donald Trump was leading among independents by 19 points, and he was down 2. That's how many more Democrats there are than Republicans in this country. And that same poll showed that both Donald Trump and Hillary Clinton were doing about as well with their respective party bases as each other. There was no clear gap there. Republicans are moving to Trump, as we discussed. So the only way Hillary Clinton loses this is if Trump pulls some of these Democratic voters or they stay home.
Okay, so that's a pretty tall order. The instant polling after the news broke on Friday indicates that Trump is polling ahead of Hillary Clinton in Florida. Now, assuming that he can win Florida, what other states must he win in order to get to 270?
He needs to win Florida, he needs to win Ohio, he needs to win Nevada, and he needs to win Iowa. Those are the 4, along with North Carolina, by the way, which Republicans won in 2012. He has to win those, and those are the states where he's closest. But even those states won't get him over the top. Assume he sweeps all of those, he'll still be 5 electoral votes short. So he needs a state like Pennsylvania or Colorado or Virginia, which have been pretty consistently showing Hillary Clinton leads. In other words, he needs to do something that he's not done this cycle, the entirety of the campaign, even when he's been leading, and he's got 8 days left to do it.
There's been people raising their eyebrows at the way the Clinton campaign has reacted to the Comey news, which is pretty aggressive, getting a bunch of people to just come out and slam him as though he's done something completely reckless and beyond the pale, even though no one outside the FBI really knows what's going on or what's in those emails or what prompted him to do this. What's the thinking there? Why the very aggressive approach as opposed to the, you know what, we understand he had to do that, but there's nothing in there, let's move on?
Yeah, I mean, I think this news jolted the campaign, and they decided that they can't go passive with it because that would create an impression that maybe something is wrong. So they decided to take the sort of unprecedented stuff of attacking the FBI. You know, the entire situation is unprecedented. I don't think we've had a candidate who's, you know, done things that have been under FBI investigation this close to an election. So we're in uncharted territory throughout. But I think the Clinton campaign decided that they had to extinguish this very quickly, and then they decided to use this as a base mobilizer. What's gotten a lot of attention since last night is Senate Democratic leader Harry Reid put out an extremely scathing, very aggressive letter accusing James Comey, the FBI director, of intentionally trying to sway the election by leaking this news, by not really leaking, by putting this letter out there. And Reid is accusing him of taking sides, and he even accused James Comey of violating the law, which is quite a stretch. But that, I mean, Harry Reid's reaction has suddenly gotten a lot more attention than the Clinton campaign's reaction because he was so aggressive.
And your question is interesting, Joe, because you were talking about how in 2003 there was something similar to this.
I'm looking here. There's 2003, the Philadelphia, there's not much precedent for something like this. But in 2003, October 8, 2003, they discovered that the FBI had planted an electronic bugging device in the Philadelphia mayor's office, and he went on to win the election decisively. So it made me think about that. Maybe the appearance of or the fact of an investigation could actually backfire, or not backfire, but put be to the benefit of the person under investigation. Again, this is a random example in a mayoral election. Totally different time, but when you don't have many precedents, you got to look at what you can get.
No, Joe, and that's a good point, and I would add to that if this news came out later, if the election happened and the news leaked later on that James Comey was, the FBI was looking into this issue, and it could have been potentially damaging or explosive for Hillary Clinton. If that came out after the votes had been tabulated, there would be an explosion of criticism, and it would just fuel Hillary Clinton's critics, who argue that her election was not legitimate in the first place. So arguably she could be thankful that this came out if she does end up winning the election. And, it puts to rest this notion that voters would have judged her differently if they knew about it at the time.
Mayor Barry won re-election as well after he was...
Marion Barry?
You don't know how these things are going to turn out.
So maybe the more serious the crime you commit, the more likely you get... I mean, I wonder, Saeed, do you think that Democratic voters don't care if she committed a crime, or they don't believe that she committed any crimes?
I think this issue is priced in. We've been talking about her and the emails issue for about a year and a half, largely through her own fault. She's not handled it well. She gets defensive. She gets lawyerly. She does half-truths, and she hasn't always been forthcoming about this. So that's been the dangerous sign for her. That's why this issue has lingered. But it's lingered for so long that every Democrat knows about this. This is why her untrustworthy ratings are high. Even Democrats have concerns about this. But they've priced this in. They know that the election is between her and Donald Trump. It's a binary choice that they have. And there's very little more, I think, they can learn about the emails short of there actually being an indictment and short of there being a conclusion by the FBI of wrongdoing that will change their perceptions of her. So I think that's what's going on.
Got it, Sahil. All right, thanks very much, Sahil Kapoor there from Bloomberg Politics out of Washington.
Thank you.
Up next on What You Missed, it's a massive week for global central banks. While the Fed and Bank of Japan are expected to hold steady, we'll also look to policy moves at the Bank of England. This is Bloomberg. I'm Scarlet Fu. What'd you miss? A busy week for central banks. The Bank of Japan, Federal Reserve, and Bank of England all meeting. Earlier today, we asked Dartmouth College economics professor Andrew Levin if we're going to see anything new in terms of an economic outlook from these major central banks.
They seem very inclined to go ahead with a rate hike in December, and so I think they're going to try to clearly signal that in their statement this week. They did something similar a year ago in the statement. It said, at our very next meeting, we're going to be considering a rate hike very seriously. And so they'll use very similar language this year, and I think markets will understand from that that a rate hike is probably coming, barring some very unforeseen circumstances.
That said, none of the three majors, or at least the Bank of England, the ECB, and the BOJ, are meeting their inflation target. If you dip into my Bloomberg at chart 4397, you see just how far from those 2% targets that all of those major central banks are now. So we'll have to get some action on the easing side, at least for the Bank of Japan and maybe the ECB, at least messaging or signaling of easing.
Right. So I think this is the story where the U.S. economy has been running pretty well over the past year. Payroll growth has been pretty strong. And there's been some, very modest signs of U.S. inflation starting to head upward a bit. Remember, the Federal Reserve has a 2% target. The measures of core PCE inflation, which is the measure they focus on, is now running at about 1.7%. So it's just a tad below the target, but not dramatically so. So I think a key question for Fed officials is that slow upward trend going to continue over the next year? You mentioned China could be a factor that's contribute to it. Or on the other hand, if the Fed hikes, will other central banks ease? That puts upward pressure on the dollar, which tends to push down measures of inflation. So it's a complex environment that the Fed is facing right now.
That was Andrew Levin, Dartmouth College economics professor.
Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg.
What'd you miss when it comes to equity markets? Apparently not a whole lot, because the indexes were little changed as we get closer to the election and a big week of central bank meetings.
We were up for most of the day, and oil was a big weight dragging on the indexes, and oil kind of won that tug of war with defensives. Exactly. By the end of the day, oil pulling the indexes back down to unchanged.
But what I thought was interesting was even though the S&P 500 did nothing and has been doing nothing over the last 5 days, the VIX has been moving higher, up by 34% during that period.
Definitely want to keep your eye out on the rising fear gauge.
All right, well, in terms of what's coming up, don't miss this. Tonight, the Bank of Japan comes out with its interest rate decision. A big question is what will the BOJ say in terms of meeting its new target? What does it mean for its quantitative easing? Remember, it's now targeting the yield curve as opposed to the monetary base.
And I'm looking at British Petroleum and Royal Dutch Shell. Those companies, obviously big oil producers, the biggest in the world, report before the bell tomorrow.
And I'll be looking at U.S. ISM manufacturing tomorrow out at 10 a.m. Eastern time. We got Chicago PMI today. It was kind of mediocre, so we'll see if that's corroborated with that manufacturing report tomorrow.
That does it for What You Missed. Thanks so much for watching.
We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.